Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, April 6th, 2025. So, this is probably a week the Bulls want to forget. They got absolutely slaughtered, and I'm sticking with, I do not believe this is about the tariffs. Yes, there are tariff tantrums going on, but the big money that's smart knows that you are not going to get extremely bearish on this market long time because of tariffs, because they can be taken away overnight. So you do it more when you see a recession coming or something like that ends, like when you have the COVID crash, when they shut everything down. That's a reason to get out. The dot-com bubble, when valuations were through the roof, that was one. The real estate bubble or the banking crisis, those are reasons that you really dump everything and you get these big moves. But tariffs, I don't really think a lot of people understand what they are as far as the general public. And I know that the big boys do. And this is just here, I want to show you something. So everybody's getting all a hissy fit on because we have the tariffs going, but I'm going to see if I can, okay. So basically what this is I don't know where this is cutting off on the screen, but the first one's China. China already has a 25% tariff on the USA, automobiles, machinery and equipment. India up to 50% on agricultural, 150% on whiskey, 50% on motorcycles. So all of these countries already have these tariffs on us, and what we're doing is simply just matching them up. And what President Trump is trying to do is just opening up a fair trade market where you're not having China that's manipulating the agricultural products with the 25% tax or say tariff, because the thing is, let's say it was we sell $1,000 worth of soybeans or pork to China. Well, they're $1,250. Now, if they can produce it or buy some kind of soybeans and pork from another country, and their tariff is 0 or 5%, what way are the people going to buy? They're going to go with the cheaper product on it. So it hurts our exports, and that these really trying to make things a level playing ground. I believe that most of these countries that have just 10% tariffs on us, they're gonna fold fairly quickly, and they're going to just remove those. You're gonna have China, you're gonna have Europe, those countries, Canada. They're gonna try to fight it, and they'll lose because the United States is one of the biggest importers in the world. If I think we are. So when all of a sudden we start putting tariffs on their products, now what happens is we're gonna be able to go and buy something that is maybe made in the United States at the same price because of these tariffs. So it's not as bad as people are talking about, because we can see all these countries just fold and say, all right, you know what, we're not having any tariffs on you, you don't have any on us, and now it's a free trade, and that's really what's being looked at. So we have, I'm showing you the VIX here, and the blue line is where we closed. And if you can see, this is during the COVID crash, so this is where we went all the way up to 85. Even when we got up here this is just going back into August 2024, when we spiked all the way up to 65. You can see we came down and closed all the way down here. So as far as a close wise, you have this right here. This is going back to 2018. This is the COVID crash. And then really before, getting where we actually closed, we got to go all the way back to this is the real estate crisis. And then we just keep going because these closes are all underneath it. And it's going back to the 87 crash. So is this, do I think that it's overblown right now? Yes, I do. Does it mean that the market has to move up? Absolutely not. There's stuff that's in place right now that it needs to be worked out, and I think it will, but it's going to be better for the United States. This is pain, but Pete, I just don't believe that it's something that's going to last, and I don't think that this big move down. I think they've used the tariffs as an excuse to do this, but we're in a global recession. The countries that have been propping up their economy through government spending and government hiring, that is gone. So it's when it's gone, that means that's where the global recession is coming. And right now it's being blamed on the tariffs, this big move, but it's been already in place, and it made no difference who was going to be in office. So the VIX closed up at the 45. Just a huge move, and we're going to get some huge volatility moves throughout the week. And it could be 2-3% going each way. So it's going to be a trader's market. It's going to be, you have to pick and choose where it is. And but the straight down move, I think is getting, it's getting exhausted. So we just want to keep an eye on things and just have an open mind on looking both ways. So let's take a look at some of our other charts. All right, so taking a look at the daily chart, this blue line has been on all week, and what that is this is the gap fill going back to May 2024. So it's been my target 50.78, and we closed at 50.74. I didn't believe that we were going to come down here this fast. I thought we were going to get some bounces along the way, but obviously it did not, and we just kept moving down. Now, if the bulls are, going to let things slide a little bit more, then really what we're looking at, the next move is coming down to this 49.68 level or 61. And then, below that, now we're getting into levels that, are going to be coming, where we're looking at gaps getting closed that were opened all the way back in 2023. And this is 44.25. We got a gap, so there's a lot of gaps underneath that they are closing right away. On the daily chart, take a look. We can see we have some bullish divergences in place. We're very oversold there. And what I would be looking at as far as, once we find some kind of low, this is the target area that I'm looking. It's going to be anywhere from the 5,300 up to the 5,400. I'm just rounding up on it. So that's all, we're talking about 250 points higher than where we are right now, 225 actually, all the way up to 300 and more. So these would be my first upside targets, and we're not really seeing any reason to expect a big move or to believe that these are the lows. What I would be looking at is we get a bounce, say somewhere back up into these levels, be able to start bringing our momentum indicator back up again. So then when we take out these lows, we're going to get the bullish divergences on the 60-minute chart. And as long as things hold on the daily, then we're going to have them on the daily chart. And if we take a look at the weekly, you can see these are the bearish divergences that are in play right now. So, like I said, it made no difference who is going to be in office because, if we did have the Democrats in it, then what they were going to try to do is just continue to spend the government money to keep things afloat. And as I said, that ship was sailed already, and it wasn't going to work. But these are, the sell signals that are in place. And the last time we had them is if we got to go back to the 2022 where we dropped from 48.37 all the way down to 34.72. So this was a massive move to the downside. And it's not even percentage-wise as much as we are here, but everybody wasn't crying saying it was on, because of our government, because inflation was up at 10-15% in real numbers. This is artificially down. I mean, meaning that people are saying that it's going to be inflation because we have these tariffs. But as I said, there was no stopping this inflation here. What they did is just put more money into it to try and get it away. But here, they can be removed overnight. As I said, Trump can turn around and say, you know what, let's let this settle down a little bit, the tariffs, and we're going to pick and choose what we're going to do. And now you're going to see the market up 500 points. But as I said, that would be only if it was because of the tariffs. The big money's they're preparing for the global recession. That's it. It's not, and it may not come out for another 2 or 3 years on it. So it's one of the reasons why I didn't think the bulls were going to have things as easy as they have over the past 5 years or 4 years, because we don't have the Democrats in there that are throwing trillions of dollars into the air and propping things up and hiring 3/4 of the employment numbers that we've gotten were through government jobs. So it wasn't going to work. It was going to end, and it did. And this is what they're pricing in. So seeing a test here, this is kind of be my next downside target. I do believe we get some kind of bounce. Maybe, if we go straight down, then we're looking at the 47.39 up to the 48.23 is the next support zone, and that may be where they try and bounce things up. But right now, like I said, I'm looking at this as the possible upside target. If they can get above that, we obviously have this resistance right here at 55.07, and then we got this gap all the way at the 56.50. So there's gaps above that will get filled. It's just a matter of when. So right now, we just want to really keep an eye on things. Seeing a bounce and then a move back down would set up the bullish divergences, but it's going to take more than a couple hours of buying to be able to turn this back up. So we would need to see in a day or two to start moving it up, and that would give us some kind of clue that maybe the selling got exhausted and we can start looking for a long trade. But the bears are in total control right now. But as I just showed you, we have some support levels that are right into this area here. So you have the 48.23. It's you're talking about 150 points lower, and then we have the 47.39. So these are important support areas, and I would not be shorting right here. And from there, I would expect that we get some kind of move to close the gap that I just showed you. But right now, like I said, you want to be a little bit careful shorting right now. It's became a little bit too easy. And on top of that, I just believe that they can change this tariff situation overnight. And that's one of the reasons why I don't believe this is big money just going short on the market because of the tariffs, because they know very well that they're not going to, Trump will not let this market go below, say, the 47.40 area, just because that's going to be that will indicate that we are in a bear market because we're below the 200-week moving average. And from there, that will force him to start backing out a little bit on his tariffs. But like I said, it's not really a bad thing overall. And I do believe that different countries are going to get in line, but I'm not a tariff expert on any of this, so we just have to wait and see. But I would really stay open-minded on things and be careful shorting down there. So actually, real quick, hang on. So I made one trade. I didn't put it into the room for the sole reason that it was a risk trade and I didn't really want to put it on. But we made $2,225 for the day. So let's see what plays out tomorrow. Fasten your seatbelts. It should be interesting. And I will talk to you guys in the morning.